Hi there, Chris. Thank you for coming down today to chat all things mortgages with us. We appreciate your time today, and hopefully you can give us a few insights into what's been going on with the mortgage world as such. So I've got a few questions just to ask yourselves today, Chris. First one I've got is, how have recent changes in interest rates affected the mortgage market? And what trends have you kind of observed amongst your clients that you've been dealing with?
So kind of going back to the Liz Truss mini budget, September 22, the whole world changed really in terms of interest rates from there. So we saw interest rates going up a lot of instability probably, and people unsure as to what to do. So it has changed the market massively, and Bank of England base rate is now at 5.25. So it's a long way from where we were. So in terms of trends, I think across that time, people were maybe more hesitant to lock in, certainly to the longer term fixed rates. So a lot of people have wanted to sort of be able to review a couple of years after that initial review where it was up in that time. Trends wise, I think we've seen a lot of shorter term fixed rates, etc., which not right for everyone, and it is down to the individual, but it's certainly a lot more popular than it was prior to that budget taking place.
So that kind of, I suppose, leads me on to my second question I had geared up, which I think you've already half kind of answered in that first bit, Chris, was what types of mortgage products have been popular recently, and why do you think that is? And I suppose with that kind of bit of uncertainty has driven that people wanted shorter fixed rates, as you were saying. Is there any other kind of elements that you've seen within it, kind of landlords doing interest onlys or something like that? Or
I mean, that's always been quite popular with landlords anyway. In terms of the interest only deals, residential market has been slightly different, but I know we're focusing more on landlords here. So certainly the short term fixed. Another thing that we've kind of seen is people being a lot more on it in terms of when they're actually starting to review the process. So historically, we may have seen people reviewing their mortgage 2 or 3 months out of the fixed rate end date. That's now come back to kind of 6 months, which is really the earliest point that people can do it without incurring an early repayment charge. But what it enables them to do is, where rates have gone up sort of hugely, they're getting an idea on what their payments are going to look like earlier, so they can start planning for it. We do recommend it, which is something I'll come on to, because it does give a couple of opportunities to perform that review and make the most of the market really. But certainly I'd say short-term fixed, again, not for everyone, but they've been a lot more popular. What we have noticed is a bit of an adjustment in when people are starting to think about their rates and renewing things.
And I suppose getting their on the landlord side, getting that portfolio that they've got up to speed for those rent increases. Get those rent increases done through the houses or the property they've got rented out, so that it doesn't come as such a shock that there's a bit more income there to play with on that front. And in terms of regulatory kind of changes, industry developments in the past kind of ideally 3 months since our last kind of chat, but kind of even in the last I suppose couple of years, has there been any major kind of regulative kind of changes at all, or not really?
I know you guys will talk about the kind of more lettings based regulatory changes anyway, but in terms of the mortgages, I think the big thing that we've seen on the back of the interest rates going up is that stress rates have increased. So in short, when lenders are looking at how much you can borrow, for sort of landlords will know they're looking at the rental income as opposed to someone's personal income. So they'll apply a stress rate, and they will then look at the rental and the coverage on that to then approve the loan. So with interest rates having gone up hugely, those stress rates have gone up as well, which means what will have been seen as a good rental option is now not covering the loan by as much. So that's been something that's changed massively. So you've kind of hit the nail on the head. I know you guys are very, very good at it. I sit downstairs in the office and listen to Brian and Debs talking about it in terms of the rental increases and rent reviews on a weekly basis. But that is because it's going to have the impact certainly on being able to potentially shop around and get a mortgage from a different lender. So maybe saving money on your mortgage as well as increasing the rental income. So it's almost acting as a double whammy. So certainly that the stress rates and the how important it is something we've seen. It makes a huge difference on purchases as well. So that's another trend that we've seen a lot different.
You were saying, Chris, this was just down in the office a couple of weeks ago, about that even some banks were looking at kind of a personal kind of income in terms of the stress rates as well. Is that kind of broadly on the open market, or is that kind of a bit of a side thing that maybe some of the smaller lenders are doing to kind of get past it? Or
so it's called top slicing. Again, lenders change their criteria all the time, so I'll be careful not to sort of drop names on lenders here in case they change it in the future. But some lenders will top slice because they're aware at the moment rental incomes on their own are failing to cover the amount needed. So what they can then do is look at someone's personal situation, personal income, which can come from employment, pensions, etc., other places, as well as their personal outgoings. So things like their current mortgage and bills, etc. And if someone's got a good personal situation, they can then top slice, i.e. use some of the normal income to prop up that rental income. So it's certainly something that we look at with clients, and I'll be honest with you, I've used it where people have been purchasing properties for buy to let more so than remortgage.
But so they're entering into kind of becoming a landlord or something like that.
But certainly something that we've used a lot more where rents have been difficult to kind of get over that stress rate ones.
Interesting. So it's just something I know that we chatted about the other day. So sorry to
no, that's okay.
To throw that.
That's all right. That's
on here. But what challenges? I suppose we've been talking about this is rents at the moment and interest rates. But is there any other challenges where your clients have been facing when securing a mortgage? And is there anything that, I suppose, with that top slicing you're talking about, how you can overcome that? But has there been anything else that you've noticed that have kind of been holding people back? This is even on minus from the landlord side, maybe even just on the resi side, as a bit of an update on that front as well. Really.
I mean, one thing we'll always look at is the current lender first of all, because we have, I mean, over the past couple of years, and even going back beyond that, we had sort of COVID and how that brought about changes. But people's positions change, so people will, lose jobs, start up self-employed, perhaps where they've been employed, have children, come out of work, etc., take on different commitments. So there's always variances. And one thing I always say to my clients is we'll always look at your current lender first. So if your mortgage is coming up for renewal, a huge challenge, and I'll go back to the buy-to-let market, but a huge challenge for landlords has been moving and finding a different lender to approve the loan because of what we've talked about. But we can always look at your current lender.
So look to achieve what you want from that first, and then go and explore the market, so to speak.
So when me and Mike are looking at remortgages, we'll consider that option first, and then we'll look to see if we can beat it. So we'll speak about the current range that the current lender's offering. Now, if we can't beat it for whatever reason, and it could be because of rate availability elsewhere or product availability elsewhere, or it could just be someone's personal situation, if we recommend the current lender, we don't charge a fee at all, because we always want to make sure that people are better off, or at very least the same, by using us as they would be going elsewhere or going to their current lender themselves. And then we keep on top, and some of your landlords will know we manage the mortgages as well. So 6 months out, we'll be sort of speaking to people to say you need to review. The current lender is always something to consider. So that's proved a solution for many.
So in terms of just finishing up, Chris, I suppose you've said advice to your clients moving forwards with mortgages is to get on with it earlier. Are there any other kind of golden nuggets that you'd want to kind of say to someone that is maybe looking at doing something with mortgages in the next little while as such? Or
Yeah, I think sort of 6 months out of the fixed rate, definitely start looking to review then.
Yeah.
You don't want to leave it too much later than that, because one thing that we're doing is we're trying to review 6 months in advance and lock in and arrange a product then, and then again review it maybe 1 to 2 months before that product takes effect.
okay,
Then it's given people kind of two bites of the cherry, as it were.
yeah, very good idea.
Rates,
Like
if
that.
rates go down,
Yeah,
we've
yeah.
got a chance to swap what we're doing. If rates go up, then
Then
we've
you've already
secured
secured that.
something.
Like that.
So
Yep.
we're recommending that to our clients at the moment. We've talked about rent reviews and keeping on top of that, which I
Yep.
know you guys will be talking about to give yourself the best position. But always speak to a broker as well, because if you're looking at purchasing a property, it's certainly something that's a lot more rent heavy. Maybe old school thinking of, I've got a 25% deposit, so I'll go out and buy a buy-to-let property,
Yeah.
is a little bit redundant, just purely because that rent now, rather than it just being an okay investment, so it should be fine, it really does have an indication as to how much you can borrow. So
Right.
plan in advance and don't be afraid to send over sort of proposed properties and rentals to us.
Yeah.
We'll make sure that the mortgage availability is there
Yeah.
before people start putting in offers.
To actually get further down the line.
Yeah,
Well,
absolutely.
Well, thanks for that, Chris.
No, that's fine.
And if anybody today wants to obviously have a sit down and a chat with Chris, then details will follow following this this chat on there. And also, if you want to book in for a call, then please do book in on the side table next to us. But yeah, thanks again, Chris, for your time, and
Thank you.
hopefully you can help some of the landlords moving forwards.
Thank you very much. Thank you.